Why this video series 108, which has a reference to JAIIB paper 2, Principles and Practices of Banking module B, Functions of Banks unit 22, we shall be discussing fund-based working capital facilities. The fund-based working capital facilities like cash credit, overdraft and bill finance facilities such as bill discounting, bill purchase, advance against bill for collection, drawee bill acceptance and bill co-acceptance, etc. shall be discussed. In this channel, various credit lending topics based on JAIIB and CAIIB latest syllabus will be discussed in simple language through small videos. It is certain that those who read and understand the topics covered in the videos will find it very easy to appear and pass in the JAIIB, CAIIB and DBF examinations. There are two types of credit facilities, working capital. One is called a pre-sale working capital finance and another one is a post-sale working capital finance. Any credit facility that has been extended against stock of materials such as raw materials, stock in process or finished goods, we call it as pre-sale working capital finance, that is prior to sale of the goods. And post-sale working capital finance are those credit facilities which are given for working capital and are against the trade debtors. Trade debtors means the business enterprise has sold the goods but the buyer is yet to make the payment. So we have pre-sale working capital finance, mainly cash credit facility and overdraft facility, whereas in the post-sale mainly it is a bill finance facility. One is bill discounting, bill purchase, advanced against bills sent for collection, drawee bill acceptance, bills co-acceptance. First, let us understand the fund-based working capital facilities. Fund-based working capital facilities are the main source of finance or working capital requirement. They are linked to the main components of the current asset, which the stocks of various goods and trade receivables. First, let us understand the features of cash credit and overdraft facilities. Cash credit and overdraft facilities are arrangements by which a banker allows the borrower to borrow money up to the sanction limit. In essence, both the facilities are similar. The usual balance in case of cash credit is in debit, that is borrowed by the customer, and occasionally it may get into credit, that is deposit by the customer. In case of overdraft, the position is reversed, since it is in fact a current account with a borrowing facility. In these facilities, a customer need not borrow the whole amount of the limit right in the beginning at any point of time. They also offer the customer the flexibility of drawing only such amounts as required and when required. This effectively reduces the cost of borrowing for the borrower as the interest is charged on the actual amount drawn on day-to-day basis. And another feature of these facilities is that drawings are linked to the level of current assets, based on which the extent of drawings are regulated, that is drawing power. Thus, the amount that a customer can draw, which the drawing power, is determined from the market value of current assets less margin amount at the prescribed rate. The value of current asset usually comprises the value of the stock of raw materials, work in progress and finished goods. Often the amount of receivables is also included for determining the drawing power, except those sales that are covered under bills finance. The credit facility given in the form of cash credit or overdraft is operated normally through a running account opened and kept by the customer, similar to current account. Whenever a customer withdraws money, the account being debited for the amount, and whenever the customer pays an amount, the account being credited. Under the law, each item of debit forms a separate loan and each credit as repayment of the earlier debts. Once a bank grants a cash credit or overdraft facility, then there is a contract between the bank and the customer that is not cancelable unilaterally. Banks has to give notice to the customer for termination of the credit facility. Now let us go to the bill finance. This facility finances directly the trade receivables of the borrower on individual sale transaction basis. Banks facilitate trade transactions by helping the parties to manage risks involved and to settle the transactions by undertaking bill collection services. The method of the bill finance, depending upon the payment obligation incurred by the bank, are as given below: bills discounting, bill purchase, advanced against bills for collection, drawee bill acceptance, bills co-acceptance. The first four are fund-based facilities and the last one is a non-fund based facility. Types of bill of exchange. There are two types of bill of exchange. On one, payable on demand called demand bill of exchange, and the other usance bill of exchange. Banks extend finance against a bill sent for collection. When an advance given against a DP bill, that is the document against payment, it is called bill purchase. The advance given is recovered from the payment made by the drawee together with the interest payable. When advance is given against a usance bill, that is a DA bill, document against acceptance sent for collection, it is called bill discount. In case of bill discount, the exact due date is known and hence the bank recovers the interest payable based on the actual due date. The loan extended to the borrower is liquidated when the buyer of the borrower pays the bill. Hence, this is a self-liquidating type of facility. Bill discounting. When advance is given against a usance bill, documents, it is called bill discount. Usance bills drawn by the borrower on the buyer are discounted by the bank and the amount of the bill less discount and charges is paid to the borrower. The tenor of the bill is as per the credit period agreed to between the borrower and his buyers. The discount amount represents interest for the period for which the bank advance will remain outstanding. The proceeds from the discounted bill are credited to the cash credit or overdraft account of the borrower. When the bill is paid, the amount outstanding in the bill discounted amount is cleared. In case of delayed payment of the bill, additional interest for the period of delay is recovered. Bill purchase. Demand bills drawn by the borrower on the buyer are purchased by the bank and the amount of bill less bank charges is paid to the borrowers. These are used when the payment terms of the sale of the borrower is on immediate basis. That is, there is no credit period. The charges deducted include interest for the period between the date of purchase of the bill to the expected date on which the bill will be paid by the buyer on its presentation. The proceeds from the purchased bill are credited to the cash credit or overdraft account of the borrower. When the bill is paid, the amount outstanding in the bill purchase account is cleared. In case of delayed payment of the bill, additional interest for the period of delay is recovered. Now, advance against bills for collection. In this mode of bill finance, instead of extending finance for each individual separately, as in the case of bill discounting or bills purchase facilities, cash credit or overdraft facility against bills under collection is extended. The drawing power is determined based on the total amount of bills under collection less the margin amount. Thus, while in the case of bill discounting or purchase facility, there is no margin of the borrower, in this facility the loan extended is lower due to margin stipulation. The amount of bills paid is directly credited to the cash credit or overdraft against the bills account. The interest is calculated on the amount outstanding in this account at any point of time. The last one is drawee bill acceptance. This is the reverse of the receivables financing. The bank or the buyer pays the amount bill drawn on the buyer to the seller's account or the seller immediately on acceptance of the bills by the buyer. Thus, it is a facility granted to the customer for purchase of goods on credit. This facility can be extended either on individual basis or as a cash credit or overdraft facility, the latter being the more prevalent mode. On due date, the advance is liquidated by the payment made by the customer against the bill that is credited to the cash credit or overdraft facility account. Bill co-acceptance. This is a non-fund based facility in which the banker adds its co-acceptance to the bill accepted by the borrower. This therefore acts as a bank guarantee for the seller, providing additional comfort on credit sales. In case of need, the seller may ask financing of such bills by a bank. Having understood these types of working capital facilities, subscribe to my channel, which is totally free of cost. The subscription will give you an intimation as and when new videos are published. More videos based on JAIIB and CAIB syllabus based credit lending topics are to be published. The name of the channel is NPIR's Learning Modules in Lending, and thank you very much.